before we get into this segment, I just want to say, you know, whenever you invest, there's always a level of risk. So you want to make sure that you take your own, invest at your own risk. Pick the stocks that you feel comfortable investing in. Do your own research. But I have compiled a small list here, of things that we can take a look at as far as stocks go. I guess what we'll do is we'll go ahead and get started here. And we'll take a look here at some of the stocks that I think that have potential for a good bounce back. The first stock being a company I'm sure all of you are familiar with, MGM. They're pretty much in the casino industry. Of course, right here it says MGM Resorts International is a hospitality company. If you're not familiar with MGM, I don't know how you couldn't be, but it just says here MGM Resorts International is an American global hospitality entertainment company operating destination resorts in Las Vegas, Detroit, Mississippi, Maryland, New Jersey, including Bellagio, Mandalay Bay, MGM Grand, and Park MGM. So as you can see here, it looks like they last traded at $9.15. Now, why I'm bringing MGM up actually is because if you're looking $9.15 compared that their 52-week low, which means once all of this coronavirus stuff came out, this stock here really took a big hit. It started trading as low as $5.90. And their 52-week high was $34.64. So if you go to the 6-month picture here, you can see, even if you go to year to date, let's go to year to date. Even if you go to the year to date, so within the last year, beginning of January, it stayed at a consistent floating around $30. If you see here as the graph goes along, it's been floating at $30, just floating at $30. Now, then if you take a look at February 20th, and this is towards the end of the February, this is when things start getting a little, sketchy with the coronavirus and everything. And you can see it just completely takes a dive. And this is after February 20th. And I'm sure that's the theme we'll see going forward, taking a look at some of the stocks that we have. But I just thought that was interesting that MGM is down to $9.15, and it's usually trading around $30. So let's just say, hypothetically speaking here, if you're like, well, the stock is done, it went down so much. Once this coronavirus stuff settles, and I do believe it will, even if this stock was to go up, let's just say half of the price of what it was typically trading at. I mean, because even if you go back and look at the 1-year picture or even the 5-year picture, within the last 5 years, it's never been below $20. So let's just say it bounces back to $15. Even if you just do $15, you can make potentially $5 per share. Or if you were able to, that's assuming it goes back up at least $5 from the $9.15 or $6, So, I mean, that's a huge drop off there from right here. It looks like February 21st, it was at $31, and then it just ultimately just a huge drop off. So MGM is definitely one to look at. It's kind of interesting to see some of these stocks that have taken a huge dip. But I do believe that they'll bounce back and there's money to be made in them. Another stock that is worth taking a look at is a company called Ballard Power Systems. They're a developer and manufacturer and proton exchange membrane fuel cell products for markets such as heavy-duty motive, portable power, material handling, as well as engineering services. Ballard Power has designed and shipped over 400 MW of fuel cells products to date. Now, the reason why this one is quite interesting, I personally I bought this share quite a while back. I want to say I got it back, let's say, I bought it around $4 and some change. So I got it around in September of 2019. So that was quite some time ago. However, it's been on a steady uptick. It's been battling, really doing well. Even as coronavirus came, if you look here, February 19th, February 20th, because we remember when MGM, we looked at the stock there. This stock was up to $12.79. The 52-week high on this stock was $14.20. Now, it did dip pretty low after it looked like it looked like it took a loss after the coronavirus stuff happened. I mean, if you look right here, February 21st, it was at $13, and then it took a huge dip down to February 27th to $8.44. Now, like I said, I purchased this stock around $4 and some change back in September of 2019. But even through the midst of all of the coronavirus stuff going on, this stock is still held pretty strong. So it's definitely one worth taking a look at. It's kind of interesting to see how well it's done going through all of this. So definitely a stock that you should keep an eye on. That's Ballard Power Systems. The other one that I'd like you to take a look at, and this one was kind of shocking to me at how much damage it's really took due to the coronavirus. And I guess it really isn't shocking because everybody's familiar with Carnival Cruise Lines. So Carnival Cruise Lines, let's see here. Carnival Cruise Lines, right now they last traded at $12 a share. Now, this one, if you go to within the last year, let's see here, or we'll go in the last 1 year, they've been trading pretty much, consistently around $40 to $50, within the last 1 year. Now, if you take a look at them in February, they really started to take a hit during the coronavirus stuff. They took a hit a lot earlier because some of the news at the time that was coming out. Excuse me. A lot of the news and stuff that was coming out was, pertaining to the cruise ships being like a cesspool for this virus, and which it is, because if you're familiar with a cruise ship, all the ductwork in all of the cabins are all pretty much interconnected. So each room typically shares the same ductwork. So all of those spores and everything that could get you sick is just going from one cabin to the other. That's why I was so shocked when they were leaving these people on the boats, because some of the people who may not have even been sick, maybe they couldn't test them fast enough, but some of the people who may not have even been sick, were left on this boat to basically just get the virus. So I don't know, maybe they had something in place to stop that. But if you look at Carnival Cruise Lines, they've been trading constantly at, $40 to $50 for the past year. Then they took a huge hit. They're trading around $12, or that was the last trade. They dipped as low. Their 52-week low was $7.94, and their 52-week high is $56.92. So for a stock that's trading consistently between $40 and $50 to be down at $10 or $12 a share, there's great potential there. I do believe Carnival will bounce back. They've got a little bit of good press going by saying that they're going to be using some of their ships for like makeshift hospitals to kind of alleviate some of the pressure from the brick and mortar hospitals. So I thought that was kind of cool. So that's definitely one to look out for. I do believe that they'll bounce back. So Carnival Cruises definitely is, in my opinion, a go-to stock that you could probably make some money. And keep in mind, guys, when these stocks, even if they go up half of the price, you don't even have to go up half the price. Let's say Carnival Cruise goes up to, $20. You could potentially make, $8 per share if they go up to $20. Now, I can't, like I said, the stock market, you have to kind of use your own judgment and pick the stocks that you feel best or feel there's potential in. But I just find it interesting that, that there's these huge losses in there, and it's hard for me to think that it will stay that way forever. like it'll never bounce back. So the last one we'll take a look at here is going to be Caesars. I'm sure you guys are familiar with Caesars. They are also in the casino industry. Entertainment Corporation. Caesars Entertainment Corporation is an American gaming, hotel, and casino corporation founded in Reno, Nevada, based in Paradise, Nevada, that owns and operates over 50 properties and 7 golf courses under several brands. Now, this one last traded at $6.03. With a 52-week high of $14.74. So it doesn't have that huge, and it looks like it's doing well in the after-hours market. It's gone up 37 cents since the market has closed today. But last traded at 603. If you look here at February 21st, that's when everything kind of started doing rough for the stock market. It was around $14, and you can see within the last year, it's been somewhere between $9 and $15 over the last year. Like I said, the 52-week high was $14.74. 52-week low is $3.22. So I believe there's a little wiggle room here. Maybe this one won't be as risky as for you. You could take $6. Even if you did just 100 shares at $6, there won't be a huge, or excuse me, not 100 shares. If you get $6 worth of shares, let's just take a look here with the calculator, and let's just do a hypothetical scenario. I can't say exactly what will happen, but we can do like a little hypothetical here. So currently, let's just say the stock is at $6.03. And we'll go this way. You do $100, and you're going to divide that by $6.03. So, excuse me, I hit the wrong button there. $100. Divide that by $6.03. So it comes out to about 16 and a half shares. So we'll just round it down to 16 shares. So you'll have a little bit of extra. 16 shares. And let's just say it's going to go up to $8, so 16 shares times $8. So you can make, $28. Now, what I would suggest in doing is get your $100 back. Leave once you sell those off. Say if it did get up to $8, you could sell your shares off to that way. You can get your $100 back. Leave the $28 in profit invested in Caesars. And then what you could do is take that remaining $100 you could buy back into the company, or you could choose a different company and kind of keep trying to build a portfolio. Build a portfolio and have shares in some of these companies that I ultimately think will bounce back at a much higher price, and then you'll have a little something to fall back on one day, a little retirement plan. Like I said, you can't always guarantee with the stock market. There's always that chance that things could go south, but with everything going on, it's hard for me to say that it'll always remain that way, that it'll never bounce back. So I think there's money to be made. Some may be a little bit longer term when it comes to coming back to life. But also the volatility is also kind of crazy. I mean, you can tell here if you have a lot of money to invest. I mean, even in the last 5 days, let's just say in the last 5 days, if you bought the stock here on Wednesday at $3.25, 3 days later, it's up to $6.03. So you could have made $3 per share in just a 3-day time frame. Now, that's kind of interesting to see. So there is money to be made in the stock market, guys, right now, even through the midst of all of this. You just got to be careful, do your own research, and, pick the stocks that you feel comfortable investing in. But we'll move on here to our next segment here. A little bit.